All right, so the consumer price index, as you can see here, came in at 7.5%. The national debt clock is literally, what is that? Is that $30 trillion US national debt? We have the 10-year government bonds increasing, coming up to a major resistance level that shows insecurity in the market, as well as, the 2-year, kind of going exponential on the upside, which is a really bad thing for all markets, guys. We hear the term inflation all over YouTube, all over, any financial market. It's one of the biggest topics of discussion. So what I want to do here is I want to talk about the short-term volatility of inflation and what, it could potentially do for the markets, as well as the long-term outlook. Keep watching. What's going on, everybody? Alex back with another video, and let's talk about inflation, because this is a huge topic. Obviously, Bitcoin was created for inflation. It's supposed to be a hedge against inflation, and the powers that be use inflation as a way to manipulate the monetary supply. So I do want to talk about everything that's been going on. I did make the video about inflation and how it could potentially bring the markets down short term. It looks like we did see Bitcoin drop a significant amount as soon as the CPI data came out. We watched it real time, like together with my group in the Fundamental Secrets. We literally watched it as it dropped. Some people actually put in some shorts and made some serious money. But in general, inflation is a very important subject, okay? And I know it can get confusing because everybody's like, oh, inflation is a good thing for Bitcoin and inflation is a good thing for cryptocurrency. So I want to explain all the context, everything involved, so you guys get a realistic perspective of what's going on. So the first thing I want to show you again is that the consumer price index came in at about 7.5%. So higher than what people were expecting. And it's for a multitude of reasons that I'm going to try to break down here. But you could see, for one example, is that the US oil is just at its all-time high. It's increasing exponentially, and it's becoming very expensive for oil. Good thing I own a Tesla. But this is obviously bad for financial markets because it's bringing up the CPI, okay? Another thing to look at is cotton's like literally increasing substantially as well. So if you look at cotton, it's rallied. Even since the last Fed meeting, we see a pretty big increase, about a 17%. We also see coffee. Now, the reason why I'm showing these things, just to be clear, is because the cost of food, the cost of oil, these things are taken into consideration for the basket of goods in the CPI. So when they increase, that means inflation, or the cost of items are increasing. And this is why this CPI number has been doing that, okay? And if we look at here, live cattle futures, we see, again, all of them going up. Everything is getting more expensive. Wheat futures, it's going up, okay? And it's kind of, it's not at its all-time high, but it looks like it's making its way back up, okay? And then if we look at the last one, which is soybean futures, this looks absolutely crazy. I mean, we're coming up at the all-time high here as well. So all of these items, the food, everything is soaring in price. It's becoming more expensive with, again, cause supply chain issues for companies around the world. If you've noticed that, in your grocery store, things are getting more expensive. It costs more for your food. So, that checkout bill is going to get bigger. And if your paycheck is not increasing, then essentially you are losing money to this hidden tax called inflation. Okay. If we look at oil, okay, I want to show you that the energy sector has been the primary driver of the CPI. Look, energy is going crazy. And you can literally see a visual representation with US oil. And this has been obviously the biggest problem for the CPI in recent histories, and probably causing tension in general for the world, okay? We see this in Russia and other places. If we look at commodities, which is basically the S&P Goldman Sachs commodities index, they're looking at all of these commodities. This is increasing. This is usually a sign that inflation's rising. People typically, especially investors, jump into commodities when, the world looks very uncertain. Okay, so I do want to set the tone straight, because I do see a lot of crypto YouTubers and analysts saying that, inflation is a good thing for Bitcoin. And although in the long term, I think this is a great thing for Bitcoin because it solves the problem of monetary inflation. In the short term, Bitcoin is extremely correlated to traditional financial instruments. And what I mean by that, as you can see right here, if we look at the S&P 500 versus Bitcoin, you can see that there's a massive correlation. When it dropped, you can see this dropping as well as this drop here. It's very correlated to traditional markets. And the reason I'm saying this is because it's kind of like a risk on, risk off environment. If people feel like it's risk off and then the whole world's kind of crumbling, I don't think necessarily in the short term they're going to flock to Bitcoin because Bitcoin and cryptocurrencies are still considered very risky. Okay, even though again, I know Bitcoin was created to solve monetary inflation, I think this lagging effect will take place in a longer period of time. A longer period of time, Bitcoin will eventually become uncorrelated to the financial markets. But contrary to what a lot of people are saying on the internet, right? Contrary to what everybody's basically saying, it's following traditional markets. Here we see it again. We're literally looking at the MSCI, which is basically new emerging markets, and the stock market, and you can see massive correlation. And this article kind of points it out here. Bitcoin looks similarly linked to emerging markets with a 0.34 correlation to the MSCI or the emerging markets index in 2020 and 2021. So it's still a little bit tied to the financial markets, and that's for good reason. It's because just cryptocurrency is not big enough yet. So this is why I made that video talking about inflation, saying it's probably going to be a short-term negative thing, and why we called the dump in FS. And why I've been kind of like shaky about the cryptocurrency markets in general is because there's kind of bigger things at play. On the contrary, though, in the long term, I do believe peer-to-peer technologies with the regulation that's going on, as well as Bitcoin's hedge against monetary inflation, could play out as a big positive bullish catalyst, again, for the long term of Bitcoin's future. So here's one kind of hint of it. Edward Snowden puts out this tweet. WikiLeaks has managed to raise $50 million without any notice by any major media or anything. That's $50 million, a lot. And it came from this new, I guess you could say, DAO crowdfunding app called Juicebox. And you see all of these projects are getting some pretty good funding. And I also want to point out, what type of, this is the WikiLeaks DAO, right? So it's kind of like the opposite of the government getting fundraising kind of on the side unnoticed, which is really interesting. Also, I want to show that there's countries out there that are fighting for cryptocurrency. So all the biggest powers of the world, China, Russia, are looking at the United States and like, oh, CPI is increasing, which is causing insecurity in the market. People are losing trust in the US government. How could we capitalize on it, right? And that's what Russia is probably doing right now with this big article they came out with. Russia moves to recognize crypto as a form of currency. And then we see Max Kaiser, which is a big Bitcoin ambassador, saying that, Bitcoin mining could be added to Kremlin in Russia, adding Bitcoin to its strategic reserves along with gold. So we could see other countries try to capitalize on America's downfall by adopting cryptocurrency, which is obviously a really bullish thing. Also, on-chain, it looks very interesting. I did pull up this chart before, the NVT ratio, which is basically looking at the transaction volume and the market cap of cryptocurrencies. And what we're looking at is ETH NVT and Bitcoin NVT, and then we're looking at Bitcoin's price. You could see, okay, that Bitcoin looks like it might be treading a little bit sideways. And then you can see that the yellow line, which is Ethereum, kind of really popped up. So it's very interesting to note, adding to the last video, you kind of have to look at the last video to get, this insight. But just to add to it, you can see that Bitcoin is becoming more fairly priced. And what that basically means is it's shooting up. The NVT ratio is not going up as high, meaning people are not speculating on Bitcoin as much. But look at Ethereum. People are speculating on Ethereum. The transactions haven't increased substantially, but the price is increasing, which is putting a high evaluation on ETH itself, kind of signaling a little bit to risk on a little bit, or maybe people just want to capitalize on the altcoins because we are in the later part of the cycle. And as we've seen, from 2017, altcoins usually play a bigger role in the later parts of the cycle. Again, hinting, hey, we're in the later part of the cycle is the point I'm trying to make. And let me just, again, put this very simple. The NVT ratio is basically looking at the market cap versus the amount of transactions. So if we have a lot of transactions, but the market cap is dropping, that means that the value of the asset is becoming more valuable. Like it's more fairly priced because transactions signal at usage, right? We want people using it. We don't want to, these huge speculation rallies. We would rather get that gradual growth so that cryptocurrency could be a better investment vehicle in general. People are scared of, all of the volatility that happens on crypto. Also, something else I wanted to point out, the whale chart, we see some whale entities jumping in harder. So what we're looking at here is supply held by entities with 10K to 100K BTC. That's a huge whale, as you can see, the kind of purple, and we have this big spike up. even after the Bitcoin rally. So it looks like they're accumulating. This is a very positive thing for Bitcoin. We also see entities with 100 to 1K BTC right here. That actually spiked up as well. And then we also see, of course, entities from 10 to 100 BTC kind of spiking up. But this is after that Bitcoin rally that we just recently witnessed. So that could be very interesting. It looks like whales are still accumulating even after the CPI data, which is a good long-term thing. Another thing I want to point out, which is very, very bullish for Bitcoin, is the Mayer multiple. This is basically an oscillator calculated as a ratio between price and a 200-day moving average. So it shows the difference between Bitcoin's price and the 200-day, and it looks like we're extremely undervalued right now. So, again, long-term on-chain metrics look extremely bullish for Bitcoin. Nothing has really changed in that, scope. So I don't want to scare people. My goal is not to spread FUD, but what I do want to show you guys is kind of the opposing perspective that nobody's talking about. Hey, all markets are crashing. Crypto's probably going to follow in the short term, and you could obviously take advantage of that. And I've been trying to take advantage of that with my recent decisions in my portfolio. Another on-chain metric that I thought was really interesting was the on-chain cost basis. So basically, I don't want to explain the specifics because it's going to get really boring, but with an uptrend, that means that short-term holders are realizing losses at a greater rate compared to long-term holders, or a bear market accumulation. So this is not really good for cryptocurrency, or Bitcoin specifically in this case. You can see, again, short-term are realizing losses at a greater rate compared to long-term holders with an uptrend. And we've been recently going on an uptrend, which again signals that we are in a bear market accumulation right now as we speak. I'll get a little bit more excited about Bitcoin when we see this dropping. Okay, so I just wanted to show you guys again both sides of the story. And if you appreciate the logical take I try to give you guys with this research and educating you exactly on both sides of the subject, do me a favor, like the video, subscribe to the channel, and share it with somebody that has to get a little bit more knowledge in this market. I think the best thing, again, is knowing what's going on and not just following people blindly. And I'm making a push with my channel to try to, put people in that direction so that when there is a dump or I do make a decision or there's something significant, you could take responsibility for your own actions. Also, countries are fighting, right? They all want Bitcoin, and we see El Salvador coming out with their bond potentially soon, very, very soon, March 15th. I think that's very interesting because, again, bonds are units of corporate debt issued by companies and securitized as tradable assets. So basically, it's a fixed income instrument. This will be the first time we've seen bonds in a country with Bitcoin specifically. What they plan on doing with that, as you can see here, is they're using $500 million for Bitcoin mining and development, and using the other $500 million to buy more Bitcoin. This is obviously good demand, and I wouldn't be surprised if we see Russia add it in some way, integrate Bitcoin significantly into their economy and their government, which will cause probably this, this FOMO effect of countries aping into to cryptocurrency. So that's really interesting. Another thing I wanted to point out is this 2021 Assembly Bill 899, which is basically pushing. It's very interesting. In the state of Wisconsin, they're pushing financial education to people in high schools. And the timing of this is very interesting. So basically, as you read here, required 1 credit of personal financial literacy for high school graduation. This is the best thing ever for everybody in America. I've always said that financial education is the most important variable in someone's freedom. This is why I set out to make this channel and to create everything I've created. So the fact that they're specifically coming out with this now, and there's recent news with the CPI data, again, showing insecurity and the education system as well as finances in general for crypto. So again, just to wrap everything up, we do have this negative CPI inflation data. Although it's a BS rule of measurement, it is increasing. So inflation is becoming an effect for sure in the markets right now. I mean, everybody's panicking in the stock market. We see it all over, some of the biggest technology companies dropping substantial percentages. So again, we see the weakening and insecurity in the stock markets, which again have a direct correlation to the cryptocurrency risk on markets. They are still risky, guys. Although we all want to believe it's going to, take over the world. It's probably going to take longer than expected. So the way I'm trading it is, as you guys know, CPI data came out. I was watching it as it happened. Some people put some shorts in. I didn't put a short in, but I'm waiting for a buy the dip opportunity, which I will make a video and showing you guys which assets I'm going to buy. But yeah, that's pretty much it for this. I wanted to give you guys kind of a brief breakdown of inflation and what's going on in the world, because that's where my research has been pointing me. But yeah, that's pretty much it. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.